All right, so we're going to go ahead and jump in here with chapter 1 of Day Trading the Basics. Welcome to all of you guys who are tuning in for this class and watching it for the first time. I'm sure some of you guys may end up watching sections of this class multiple times, which you're more than welcome to. As we get started here, I'm going to do a little bit of housekeeping items, and then we're going to dive into this chapter. So in Day Trading the Basics, the goal to set expectations is that by the end of this course, I will have prepared you to trade one specific setup. It is my favorite pattern. My goal for Day Trading the Basics is that I lay a really solid foundation that you'll be able to build upon as you continue to learn and hopefully go through our Warrior Pro curriculum, which includes day trading, strategies, and scaling. That is where I teach all of my setups from beginner to advanced in full detail and with live trading archives to accompany them. But the goal here for Day Trading the Basics is really about setting a foundation. I'm teaching you, I'm helping you learn something that is no doubt fairly complex. And I have found that the best way to teach this is rather than to try to teach you every nuanced detail of each individual component and then just go sequentially through all those components, it's actually far better to give you the cliff notes and most important information about each of these components, to introduce them to you, and then to come back around to them and add additional detail. And so we're actually going to take that approach as I teach this class to you guys. And so Day Trading the Basics is split up into 15 chapters. I'm not going to do 15 circles, but you get the idea. So each of these essentially are a pillar of the foundation that we're building. And so I'm going to introduce each of these topics to you through Day Trading the Basics. And then what we're going to do is we're going to come back when we get into strategies and scaling, and we're going to be revisiting each of these topics. And each time when we come back, we're going to add a little bit more detail, a little bit more detail, and that is how by the end of strategies and scaling, you're going to have a really solid foundation. I've found through experience that if I instead try to teach you everything there is to know about this first pillar, this alone might take 6 or 10 hours. And then you're like, you're in over my head, you're going too deep. And to really fully understand everything there is to know about this pillar, like anything else, there's interconnectivity with these other elements of trading. So I've been teaching for many years, as you probably already know. When I first taught this class as a course, it was in the summer of 2014. And at that time, I did take the approach of trying to teach all of it in just every ounce of detail in kind of one go. And I knew that people were rewatching the classes many times to help them kind of better understand it. And a few years later, I decided to separate the curriculum between Day Trading the Basics and Day Trading Strategies and Scaling. So right here, I don't want you to think, for those of you who have been trading for some time, that this is going to be beneath you either, because this is also going to introduce you to the way I look at trading, which is unique to my strategy and just, you know, the way I approach the market. So although you may have quite a bit of experience trading and may have even some degree of profitability, Day Trading the Basics will still be helpful because it is going to introduce you to the way I look at the markets and to the way I've been able to find success as a trader. Because, you know, ultimately, some of these things which may seem simple in the basics actually make all the difference. So with that, let's talk a little bit about some of the topics that will be covered through Day Trading the Basics. This will become the foundation, your foundation, as a day trader. I'm going to give you the roadmap of how I built my career as a day trader. I'm going to walk you through how I select stocks worthy of day trading and how I find them in real time. I'm going to share with you how I manage my risk on my trades because, as we know, trading is risky. I'm going to walk you through my exact entry and exit indicators, candlestick patterns, and written strategies. During Day Trading the Basics, the goal is that you walk away from this course with one strategy, one setup that you can implement and begin trading in your own account. As always, I'm going to encourage you to practice in a simulator before you ever put real money on the line. And then by the end of Strategies and Scaling, you'll know all of my setups from beginner to advanced. And at this point, I probably have about 25 that I trade pretty much, weekly. I'll find an opportunity to trade one of those 25. And there's probably closer to 35 or so, maybe a few more setups that I trade in total, although some of them are a little bit more obscure. I don't trade them as often, and some of them are particularly high risk, and so they're not something you'll see me trade as often either. Then I'm going to walk you through how everything that I share with you, everything I teach, is based on my own analytics, which essentially is the back test of my strategy. It's well over 25,000 trades at this point, and it is all of the proof that what I share with you works. It doesn't guarantee it's going to work for you, but it's the proof that this technique has basis in reality. It's not just my opinion of what I think might work. It's actually based on my own profitability. So when we look at those metrics will show you the price of stock that I make the most money, the time of day that I make the most money, the day of the week that I make the most money, the months of the year that I make the most money. More detail about the specific stocks, not just the price, the amount of volume it has. The amount of volume it has today compared to what's normal. Does it have news? Does it not have news? How much it's up? All of this essentially just in the data paints a picture of my strategy. And then what I'm going to really do for you is be the translator to translate what all of that means in reality to allow you to convert that the sort of more like data set, that set of data, into an actual workable set of rules and a system that you can follow each day. And something that I'm going to say many times through this course is that profits are a byproduct of the process. So I want you to focus on the process, not the profits. I know that's easier said than done, but if you focus exclusively on profits and you're thinking, I want to make money today, I want to make money by the end of this week, I got to make this amount by the end of the month, you're going to put yourself in a position where you're desperate, you're getting aggressive, and you become blinded from following the rules because you're just seeking profitability. You're trading from a place of scarcity and desperation, and that does not lead to success. It in fact, most often leads to failure because it puts you in a position where you're trading impulsively and emotionally. So instead, to take the temperature down as part of your experience here at Warrior Trading, you're going to have access to tools that will encourage you to trade in a safe environment. A simulator, so you can practice everything you learn without putting real money on the line. The scanners, the charts. So you've got all of these resources here to help you learn the right way. And then once you've proven profitability in the simulator, by all means, you can start testing the water with real money. So once I walk you through these analytics and help you understand the very specific profile of the type of stocks that I'm going to be looking for each day, how I manage my risk, my exact entries and exits, I'm also going to walk you through some advanced market data, how I use level 2 and time and sales data to better interpret sentiment in the market. I'm going to walk you through how I've set up my trading software to empower me to trade quickly and efficiently, how I manage emotions after big losses because they are inevitable. And then I'm going to share with you my business plan, and I'm going to convert it into a trading plan that you can follow. That's a trading plan that you'll be able to use in the simulator, and that'll be taught at the end of Day Trading the Basics. It'll be a basic, simple trading plan. Now, at the end of, towards the end of Strategies and Scaling, we'll implement and I'll apply a second trading plan, which has even more depth and more detail, which will reflect everything you've learned up till that point in the curriculum. What you're going to be learning through Day Trading the Basics and Strategies and Scaling is the language of technical analysis. It is a universal language. Every financial instrument, you can pull up charts just like this. These are called candlestick charts, and you're going to learn everything there is to know about them as you go through this course. One of the things that is important to understand is that these work because they're so well respected. Just in the same way that stoplights work and stop signs work, stoplights and stop signs are the universal language of the road, right? When you're driving, it doesn't matter if you're in France or you're in Spain, you see the shape of a stop sign and you stop. You see the color red, you stop. You see orange, you know to be careful. You see green, you know to go. Nowhere do they flip these because it's universal, and it has to be. And so it's well respected. Charts are very much the same way. They actually have buy and sell signals right on them. I can see them. They're plain as day for me. Your eye hasn't yet been trained to pick them up, but that'll change as you go through this curriculum. So what I will hope to share with you is my deep understanding of why stocks move higher. You're going to learn that stocks move higher because companies want them to move higher, and they allow them to move higher. So for a stock to go up 50%, 75%, 100% in one day is not just a fluke. It's intentional, it's desired, it's good for the company. And on the other hand, for a stock to go up 50 or 100% and then to come back down is the result of typically specific actions that company took that ended up hurting their stock price. What I'm going to share with you are 5 concrete pillars that I use to determine whether or not a stock is worthy of trading. Just because a stock is worthy of trading doesn't guarantee it's going to go up. There's no formula that is right 100% of the time. And so I don't want you to try to be seeking the holy grail or certainty in the market, which is inherently uncertain. There is no algorithm that you can plug in as a retail trader that will print money every single day. You have to be willing to accept that there will be losses and there is risk with trading. But we can develop an edge. And so as you learn the 5 pillars of stock selection and you learn the language of technical analysis, I'll be connecting the dots with these examples of trading that I've taken over the years. This specific trade, for instance, was a stock that was up 179% on the day. It had a price of about $16 a share, as you can see right here. And this is a stock that squeezed up. It pulled back a little bit, it pushed higher, it pulled back a little bit, and each time it pulled back, that represented to me a buying opportunity. And so there, when we had a red candle, it was wait, pause, and when volume came back in and the price moved higher, that was the green light that told me to get in. And I got in, and we got a nice trade up to $16. Then it pulls back, pause, and then I get back in, and we get a nice move up to 20. Then it pulls back and it moves higher. In fact, you'll see as we look at all these examples that the market very much moves in these waves. We have these nice waves moving up. And so our job as traders is to try to see a little ways into the future. Even if we can't see days or weeks or months in the future, maybe there's a way we could see 15 minutes into the future. And if we see a stock that's made a big move up, we know if we buy the top here, yes, it could go higher, but we're positioning ourselves with a lot of risk. So I like to pay attention to the areas where price changes direction, where it goes from moving up to moving down. And then, very importantly, when it goes from moving down to moving back up. This right here, the closest you can get into this low point, the better off you'll be. And this is, in a sense, for a day trader, the closest we'll get to buying low and selling high. Now, some people would say, well, the stock's already up 50% on the day. You're already buying high. And maybe so. And in that case, I'm buying high and selling higher. But it's still with a great deal of focus on risk. And when I take trades like this, when I buy on these little pullbacks, my max loss is the low of the pullback. As long as it can hold that level, then I'm holding for the next leg higher. And then I take profit right when it starts to pull back. So then I get out, I let it pull back. And you know what? If it keeps going lower, then there's no trade. But if it curls back up and makes another attempt, I'm back in with my stop at the low. And so often when I'm trading a stock that moves higher, like you see here in this example, this is not one entry and one exit. It's a number of trades where I get in, I add to the position, then I get out, I sell half, I sell another half, and then I sell the rest, and then I get back in. Now, as part of the trading plan that I'm going to share with you, you'll be trading in the simulator a lot. And this is the alpha phase of trading where I want you to trade as much as possible. I want you to get in there. I want you to press the buttons. I want you to be really active because you're going to gain experience by doing that. But when it comes to trading with real money, what you're going to focus on when we get to that point is one trade a day. One trade a day. That's the way for a beginner to learn. because by taking one trade a day, what you're going to realize is that you focus on taking the very best quality setup. You sit, you patiently wait, and when you see that setup, and it's the setup that I'm going to share with you, you're going to take that trade. And the focus and the goal is not to hit a home run. In fact, it's just to hit a base hit. So we have a stock that's squeezed up very quickly and then has pulled back, maybe one candle, maybe two candles, and then begins to move higher. That's that change in direction right here. So this is where I'm a buyer. We let it squeeze up. We hold. And then when we get that first red candle pulling back right up here, we sell. And it's just one trade. And if you can make just 20 cents per share per day, yes, with 100 shares, it's only 20 bucks. With 1,000 shares, it's 200. With 10,000 shares, it's 2,000. Now, you may know at this point in my career, my daily goal is actually $20,000 per day. And with my shares, I often will take 50,000 shares. But today, I don't have to take just one trade a day. That was important as a beginner. That's when the training wheels were on. But now, I could take 10, 15 trades a day. So, with 50,000 shares, 10 cents a day, well, 10 cents a day is 5,000 shares. So, $5,000. So 20 cents a day is $10,000 of profit. So $10,000 of profit on 20 cents. And if I can do that 2 or 3 times a day, factoring in the losers, I'll have a $20,000 green day. And that's my hot market daily goal. Now in colder markets, I'm content to trade with smaller size and to average closer to $5,000 a day. And I have found that we certainly go through market cycles. Some cycles when the market is very hot, I'm exceeding my daily goal on a regular basis. Other markets cycles when the market is a little bit cooler, I'm coming up short on the daily goal. And so there is a bit of ebb and flow to the market. I size up when it's hot, and then I take my foot off the gas when it's cold. And these are all the things that you'll be learning about as you continue to spend time learning about the markets and certainly going through this class. And it all begins with practicing in the simulator. This is the starting point. And so you'll have the simulator, you'll have your order entry window. And for those of you guys that this is all foreign, don't worry. I'm going to walk you through every component of this, what all the numbers mean, what the acronyms are, how to buy, how to sell, how to set up your hotkeys. But if you're the type of person that likes to learn in a hands-on way, you can load the simulator, you can start punching the hotkeys, you can start jumping in and out of it today. And you'd be better off for it because the sooner you start gaining experience, inherently you're going to be asking yourself questions about, why did that work that way? And then that's going to get you down kind of the rabbit hole of learning maybe some of the details and the nuances around the pillars of the foundation that are part of this first section of the curriculum of Day Trading the Basics. And of course, the only thing that goes better with trading the simulator is tracking your metrics. And we aggregate all of your metrics in the simulator for you, so you don't have to do it on paper or in an Excel sheet or using third-party software. You could see plain as day how you're performing. You can sort by different periods of time. You can look at different types of stocks, days of the week, months of the year, etc., and get a sense of what you're doing that's working and what's not working. This, as you're going to learn as we go through the curriculum, is very important. One of the best things that I did as a trader early on was track all of my trades. And I did it at a time when I had to use an Excel doc, but that was the best thing that I could have done because that was where I found the little nuggets of, oh, here's something you're doing that's working consistently, and let's double down on that. Or here's something you're doing that's causing you a lot of unnecessary losses. Let's kick that to the curb and just forget about that strategy and that setup for a while. So today's lesson in this chapter specifically, I'm going to walk you through a few different things. Part one, I'm going to talk about getting ready to go pro with the Warrior Pro membership, which for some of you guys, you're Warrior Starter members, which gives you access to Day Trading the Basics. It gives you access to certainly the community and all these different tools and resources. But many of you will want to graduate from the Starter and go into the Warrior Pro membership at the end of this class. And others tuning in, you're already full-fledged Warrior Pro members, and so it'll give you a little bit of a taste of what is to come. Then I'm going to walk you through the tools required to trade. I'm going to share with you the equipment required to day trade. I'm going to talk about how to create tax-free income for the future, how to set your targets and goals in terms of profitability, and I'm going to share the leading causes of failure because it's important to acknowledge that trading is risky. And so We should learn from the people who have failed before us, learn from their mistakes and try to do something differently. And then I'm going to ask you what success looks like for you. So these are the topics here for chapter 1. And so let's begin with getting ready to go pro with the Warrior Pro membership. So before you go jump into day trading strategies and scaling, for those of you who already have access, I do want you to watch every chapter of Day Trading the Basics. This is important. I know some of you will say, I already have the computer set up. I don't need to know about the equipment and the software. And if you want to jump a little bit forward through that section, that's okay. But I don't want you to skip this entire course and just jump into the deep end, because inevitably you will miss some tidbits that are very important. So lay the solid foundation. Remember, the market's not going anywhere. It'll be here for you. So take your time, go through the classes. One thing that I'll say between hot markets and cold markets, a lot of traders come into the market when it's hot. You hear about traders who are making money, you get excited, you don't want to miss the opportunity. But it's actually during the cold markets when you have really, in a lot of ways, the greatest opportunity to grow as a trader. Because when the markets are cold, it, number one, requires you to be more disciplined in order to produce consistent profits. And number two, it prepares you to essentially be really efficient with the way you trade. You have to make the most of the limited opportunities that you have. And so you get really good at making the most of these opportunities. And then when the market heats up, it's like that saying, if you can make it in New York, you can make it anywhere. If you can make it during a cold market, then when the market heats up, it is incredible. On the flip side, if you learn during a hot market and you've never experienced what it's like to be in a cold market, you're not fully maximizing on the hot market, just inevitably, because you haven't gone through the process of trading through a cold market to make yourself a more efficient trader. So it's not to say that there's anything wrong with learning when it's hot, but for those of you guys that are learning when it's cold, I would just give you the words of wisdom that it's not necessarily a bad thing. And for those of you guys who are learning when it's hot, just make sure, certainly if you start trading with real money and producing some profit, that you save a little bit for a rainy day, because the market will cool off at some point, and you'll be grateful you put a little bit away. Number two, I encourage you guys to log into the Day Trading chat room as often as you can to watch me trading. Being able to watch over my shoulder while I'm trading is a great experience. One of the reasons that my stream is only available to members who are going through the curriculum is because it's a classroom. And it's me putting the strategies I teach on display for you. So it's a live demonstration of me trading everything that I walk you through in these courses. So if you had access to the stream, but you didn't go through the courses, then it would be inconsistent with my goal of teaching you how to be an independent trader. I want to teach you how to fish. I don't want to just feed you. Yes, I'm going to give you my watch list every day. I'm going to walk you through what I'm doing, but it is not my desire to have you try to just blindly follow me. I do not want you to be dependent on me. There may be other people out there that will send you text alerts and say, just follow me on these trades. I'm going to actively say the opposite. I'm going to say, don't try to blindly follow me. Trade what I'm trading in the simulator. Practice. Get a sense of how these move. But when you get to the point of taking those trades, when you're getting ready to trade with real money, it has to be because you understand the strategy. That's what creates true financial independence. That's what creates true self-sufficiency. Now, you'll hear me talk about my personal life as we go through this class. This is a book, 5 Acres and Independence, that was written during just after the Great Depression. This copy was printed, let's see, this was in 1945 that this was printed. It was during World War II. This is a wartime book. In accordance with the regulations of the Wartime Production Board, the format of the book has been designed to save paper and other materials essential to the war effort. 5 Acres and Independence. This is a book that I got when I was a teenager, and it's very meaningful to me because when I was a teenager, I things were a little tough for me. I was growing up in Vermont, pretty rural area, as you probably know, and my father was struggling quite a bit, and I I think I felt I was a very anxious child, and that was in a large part because of what was going on with my dad. And he was sick, and he ended up passing away. And I'll talk about that probably maybe more in this class. But as I went through this experience of watching him struggle and suffer, and then eventually pass away, I was faced with this question of the meaning of life. And he never really got to live what you would say is your golden years of retirement. He died when he was 61, and his father before him died when he was 61. And so I started to think about, what's the point of working 40 years for a boss that probably doesn't care that much about you, only to end up not even getting to enjoy your retirement. And this book really inspired me, and it made me think that maybe like Henry David Thoreau, if I could just find a few acres of land up in the mountains of Vermont, that maybe I could be completely self-sufficient. There's another book called The Good Life by Scott and Helen Nearing, where they talk about leaving New York City during the Great Depression and moving up to Vermont. And where they moved up to Vermont was just down the road from where my great-grandfather had a farm. And what Scott and Helen did was they wanted to live off the land, and so what they started doing was making maple syrup in the spring in Vermont, the late winter, early spring. And they would make enough maple syrup to be able to trade it for other goods they needed through the year. And so they ended up writing books and teaching people about how to escape the rat race of the city and how to be self-sufficient. And so self-sufficiency is always at the top of my mind. And so when I'm teaching you trading, I had no interest in trading being something that would get me rich. That was not what I was looking for at all. Trading for me was the path to self-sufficiency. It was the path to leading life on my own terms, to not having a boss looking over my shoulder, to not having to, work for someone else to help their dream come true. It was about helping me live a life that was in line with my values. And so when I walk you through my strategy and I share with you, anecdotes and stories from my life, all of this is through the lens that I'm incredibly grateful for the success that I've found in trading, and I'm thrilled to share it with as many of you who are interested in learning. And I've been thrilled to be able to be in the position where Warrior Trading has been popular enough that I've been able to hire a development team to build software to help, in my hope and belief, make the experience of learning how to trade more enjoyable, better, and maybe a little bit easier. It's impossible to know. I'll say, as always, we know trading is risky and there's no guarantee, but I have done everything I can to put it all on the table to teach you and to provide the documentation and the resources through these courses and the tools that we offer to help make your journey of learning more about the markets that much more enjoyable. So number 4, I want to remind you not to trade with real money until you've completed the pre-trading checklist in Strategies and Scaling. And then step 5, a reminder not to blindly follow me or anyone else for that matter, because that's not the way to learn. It's okay in the simulator to trade the same stocks I'm trading, but when you're talking about trading with real money, if you're just blindly following someone else, to me, that's the equivalent to gambling, and you don't become self-sufficient by gambling. I really don't want you guys to skip the classes. Trading is hard, and I want you to put as much effort into this as you can, and don't try to take shortcuts. Build a solid foundation. This is a marathon. It's not a sprint. Okay, so when it comes to day trading strategies, there's really 2 general schools of thought. One is momentum trading, and the other is counter trend trading. So momentum trading was what I showed you back here, where something is going up and you're trading the momentum. So you're buying the pullback, you're selling as it moves up, you're buying the pullback, you're selling as it moves up, buying the pullback, selling as it moves up. Counter trend trading, on the other hand, is when you're watching something moving higher and you're waiting to profit from the reversal. Now, this is easier to understand in the context of something that's been selling off. and you're looking to buy for the reversal back up. And while counter trend trading can provide some nice profit to loss ratio, you've got relatively low risk buying something that's been selling off for quite a long time with a good amount of upside. The challenge that I've found is that it's generally harder for a beginner trader to correctly time when the momentum and trend is going to shift versus just jumping on and joining an established trend. And so the primary strategy that I trade and the primary strategy that I teach is a momentum-based strategy where we're looking for something that already has established momentum, it's already moving higher, and we're looking for essentially the lowest risk way we can buy something that's already strong and get a piece of that, that next leg higher, so to speak. So having said that, we do have counter trend strategies that I teach in strategies and scaling, but they are a bit more advanced and they won't be part of what you're learning here in Day Trading the Basics. So this is an example of momentum. This is a stock that went up from about $2 a share all the way up to $12 a share. So just a nice 6x return in one day, in a matter of like 3 hours, which is unbelievable. No doubt this is the type of company that on this particular day was trading on very high volume. And I would give you the chance just to speculate as to why the stock would go up 500, 600% in a single day. It's because of breaking news. It's because the stock had a catalyst. It had a reason to move higher. So I am I'm a volatility trader. I don't make money buying something at 5 and selling it at 5. I make money buying something at 5 and selling it at 6, 7, 8, 9, and 10. And in order for a stock to go from 5 to 10, there needs to be an underlying catalyst. And that's going to come in the form of breaking news. And so the times that you'll notice that I trade are during the times of day when breaking news is most likely to come out. Now, some of the other strategies that I teach, which are a bit more advanced, including counter trend trading, can be traded at all hours of the day and are not dependent on trading breaking news. So they can be more accommodating to traders with different schedules. I generally think of counter trend trades where you're timing a reversal, either buying something that's weak or shorting something that's strong, to be good for base hits. Rarely will I hit a home run or have a huge winner on a counter trend trade, but it can be good for some nice base hits. Now with momentum, in a very hot market, having a stock that goes from $5 up to 8, 10 or higher, I mean, these can be more than just base hits. While it's good to focus on just hitting the base hits, some of these trades can end up really producing some of my, the most profit potentially in any particular month. I don't trade at a level where any one trade is enough for me to retire, but they can make a meaningful amount of profit. So, for instance, with my daily goal of $20,000, to be up $45,000 in one day is 2 times my daily goal. That's a really good day, and that makes a meaningful difference towards my profits and goals towards the month and the year. But as I said, you will learn counter trend strategies as well, where I look for something that has been selling off, and then I look to buy the dip or the reversal down here for the move back up. And some of the best reversals are V shaped, where it's a strong sell-off and then a really strong bounce. But usually, because the strong sell-off had so much downward momentum, it's usually more like a sort of inverted check mark. It's a little bounce. Maybe 25% back up off the low. Occasionally you'll get a full V-shaped recovery, but that's not as common. It does happen, but it's not as common. So your total profitability is a bit more limited. All right, so now let's talk briefly about, before I do this, let me do a little humble bragging here. For those of you guys that didn't know, you probably already know, so I'm just going to say it anyways. Warrior Trading's course here, which is Strategies and Day Trading the Basics in Strategies and Scaling, has been ranked by Investopedia as the most comprehensive day trading course, which I was thrilled that they recognized us as that. We've also been featured on Business Insider as one of the best day trading courses. Many of you guys know I'm a featured contributor on Entrepreneur. Of course, I've got 2 million subscribers plus on YouTube. And so I'm very active over on YouTube, which we've been thrilled to have such a incredible community of subscribers and people tuning in over there. And I've also been interviewed on a number of different podcasts and even on the TV. You've seen me on different TV news programs talking about the stock market. I was in a documentary about trading, which was really fascinating. So, and I've got a best-selling book that's on Amazon, which if you haven't already checked that out, you're welcome to check it out. How to Day Trade the Plain Truth. And there's another book, which is going to be focused just on technical analysis, which is coming out soon. We haven't published it just yet, but that'll be coming out very soon. So I appreciate you guys who are part of this community now. Some of you are brand new. Some of you who have been here for some time maybe already, or who have been part of the larger community on YouTube or maybe on Facebook for a while. So thank you guys for taking the leap and becoming a member, full-fledged member here at Warrior Trading. And now let's talk about the tools that are required to day trade. So day trading is obviously a highly technical skill that you're going to be learning, and there are some specific tools that you need in order to perform well. I would say it's obviously a bad carpenter who blames the tools, but at the same time, having the right tools is important. So when it comes to charting, I'm using the same software that you see every single day in the chat room, and the same software you have access to, Daytrade Dash, for all of my charting. I love it because we have 10-second time frames. We filter out ADFN quotes, so we have clean market data. And the charts are easy to navigate. They're easy to scroll in, zoom out, move it around, draw your trend lines. And I'll walk you through, of course, how I have them set up as we go through this class, or this course, Day Trading the Basics. For the scans, I'm using Daytrade Dash scanners for all of my scanning. So to find stocks to trade, I'm using these scanners. They're searching for volatility. They're searching for stocks that are moving in real time. For my news feed, Daytrade Dash APIs with a number of different data vendors, so we get news right into the platform. For the reporting, I'm currently using TraderView. It's a third-party platform. I have no affiliate relationship with them, so use them if you want, don't use them if you don't want. It's not too expensive. It's about $49 a month. I don't know, it's a little expensive just for analytics, but the good news for you guys is that when you're trading in the simulator, we aggregate all your data. But if you've been trading with real money, I would encourage you to export your trades and then import them to TraderView so you can get a sort of baseline benchmark of how you're performing right now. And then when it comes to trading, I've used and funded accounts with many different brokers over the years. I've done broker reviews and platform demos of all these different platforms. There's a lot to be said for commission-free trading. A lot of our members really, really like Charles Schwab and the Thinkorswim platform. A lot of members like Webull and their platform. And other members like brokers that cater a little bit more to day trading. There's offshore brokers that have sort of, I guess they have a value proposition, especially for international traders. There's domestic US brokers. And I think what I'll do is I'll put a link in this section of the curriculum over to some of the platform demos that I've done of these different brokers and my ranking, so you can look and dive deeper if you're interested. I'm currently using Lightspeed Trading as my broker. They do cater to institutional traders and also to retail traders that are trading with larger positions and need more advanced order routing technology, which is more significant when you start trading with 40 and 50,000 shares versus trading with 100 shares or 200. So there's kind of a tipping point where it can make sense to use more sophisticated tools, but as a beginner, using commission-free platforms is also great and has its benefits. So those are your kind of 5 critical high-level tools that you'll need, but that, of course, accompanies specific equipment. So when it comes to the equipment for trading, you can be very simple or you can be a little bit more complex. You can see sort of 2 variations here. I have my full trading station at home that I've got set up, which is powered by a desktop computer. But I reluctantly say that because I love laptops. Laptops for me, they offer the flexibility and the portability. You could trade from anywhere in the world. This is the amazing thing about being a trader. the market has never been more accessible than it is today. So to really take advantage of that accessibility, you'd want to have a laptop. When I first started trading, I couldn't afford to travel, but all I had was a laptop, so it's what I used. And so I am quite, I don't want to say addicted, but I can't live without a trackpad. This is rather unconventional, I suppose you could say. Most traders do not use trackpads. I'll put on my whiteboard here. But even with my desktop computer, I use this. This is connected to a desktop computer, and it's a trackpad. But I really like it. I like that I can type quickly and boop, boop, and jump around really quickly. This for me is my sweet spot. And so even at home, I use the keyboard with a trackpad. And then of course, when I'm traveling and I've got my laptop, well, the trackpad's all I have. So, but I don't use a regular mouse. Anyways, it works well for me. So when I was first getting my setup organized, I had a couple of old laptops I was using. I had a couple of old monitors that I was using. And eventually I upgraded to portable monitors. I don't have, oh no, I do have one right here. I really like these portable monitors. Well, I have a picture of one I'll show you in just a second. But they're compact. You can bring them with you pretty much anywhere. And so whether you set up a trading station as a desktop station or a laptop, it's your call. At the end of the day, it's whatever works for you. But this is going to give you a little bit of the sort of history of my trading stations. This was an earlier one. This probably dates back to 2012. We've got, let's see, 1, 2, 3 laptops, and then 2 external monitors, and then a keyboard. And here I do have a couple of mice straggling around, but I was accustomed mostly to using the keyboard. This was probably 2014, still maybe 2013. Still have those same laptops, but have upgraded some of my monitors. So now I've got a 6 monitor layout there. This here upgraded to a Lenovo computer right there. That was a nice gaming computer, which I really liked. Still had this computer, which moved there, and this one was sort of moving to the back seat over here with a little travel monitor. This is a laptop with 2 travel monitors connected on either side when I was doing a podcast. This is me traveling and trading. So traveling across different parts of the world and just bringing my laptop, 1 laptop and 2 external monitors, all fits in my carry-on suitcase, and that's all I need. And it's incredible freedom. As long as I've got a good internet connection, I can trade from anywhere in the world. And so when we hosted this event here with members of Warrior Trading who had earned some big badges, I think, let's see, Max had his $1 million badge at that time. Hamong had a $1 million badge. Manoli had a $1 million badge. Danny right now, he's got his 750K badge. Jess has a $1.5 million badge. So anyways, we were having an in-person summit, and just trading on my laptop right there. And it doesn't slow me down. I've got a Sprinter van that I use kind of as my mobile trading command center when I travel and take, I have 2 sons. I take the boys on road trips during the summer, and I set up in the morning and trade for 2 hours, and then we go exploring national parks and, all these different things. So I do have 2 monitors hanging from the ceiling here. They're each 24 inches, and then I've got my laptop, and it works quite nicely. I've got a Starlink mounted to the roof. This was me trading in a boathouse on an island off the coast of New England. That was kind of a fun little trading station. This was me trading on an airplane. That was a bad idea. I don't recommend that. You could do it. This is me trading on a boat. That's not a great idea. I got very seasick. This was off the coast of Capri, the island of Capri in Italy. But in any case, when it comes to setting up your trading station, you'll need a trading computer. You'll need some external monitors. You'll want to get some mounting, some monitor mounts and a rack probably, and there'll be some miscellaneous equipment with the setup. When it comes to the computer, I think a gaming laptop is almost always going to be sufficient. A solid state hard drive, enough RAM, and a gaming graphics card. NVIDIA graphics cards are good. No touch screens, no glossy screens. It'll hurt your eyes. 15 inch or 17 inch. 17 inch is a little bit better. Falcon Trading Computers are a computer company that makes computers specifically for trading, and they're a little more expensive. I have, let's see, 1, 2, 3, 4, 5 of them. So every couple of years I upgrade and get a new one, and I've been thrilled with them. They're great computers. They're a little more expensive, but they're great computers. When it comes to the monitors, 24-inch Asus monitors are like $133 on Amazon. I don't like 4K monitors. I actually got an offer from, I think it was Samsung or Dell. They wanted to send me a 52-inch curved monitor. They said it retails for $3,000, and they want me to do a review of it. And I said, no, that's quite all right. First of all, people don't need to buy a $3,000 computer monitor. Second of all, I really like being able to snap things to full screen and have just a regular 1080 kind of screen. With 4K monitors, everything is too small. It's overrated for trading. Imagine using an Excel sheet on like an 8K monitor at 52. I mean, it would just be unbelievable. Everything would be so tiny you couldn't read it. So don't overcomplicate it. Just get a couple monitors. If you need to get a USB portable travel monitor, these can connect really to any computer. Some computers, you need to get an extra video card, but most don't. And then when it comes to little monitor racks, make sure you get one with elbows. When you get one with elbows, you can move in the monitors to get them nice and close together, the way I have mine. When there's no elbows, sometimes you end up having like 3 monitors, but there's like 4 inches of space between the monitors because the rack was designed for 27-inch monitors, but you got 24-inch. So that can be kind of annoying. So get the rack with elbows, do yourself a favor. And if you're using a laptop or a computer that only allows one external monitor, and then the rest of them are just mirroring the same display, you need to use a USB to HDMI adapter, and that'll add the ability to add more monitors. So that's a simple walkthrough of your trading station. A couple little monitor clips for when you're traveling are great. These ones, I've gone through a bunch of them. They're a little flimsy, but they work pretty well. They've got new things that are coming out. Of course, grabbing a couple USB adapter cables. These are terrific. And all in, you can have a great setup like I had when I first got started for really a couple $100 if you're using an older computer that you got from somebody. Or you can spend, a couple $1,000s or even more if you want to. But I'm a big believer in thinking about trading like a business. You're setting up a business right now. You've already invested in your education, and you want to think about getting a return on your investment. So you're obviously going to gain a tremendous amount of financial literacy, but does it make sense to spend $5,000 on, a computer system right now? I would say no. Do your proof of concept. Prove you can make some money in the market, in the simulator, maybe a little bit with real money, using the minimal viable setup. One that isn't holding you back, but you don't need to go crazy. Just keep it simple. I think that's going to be good words of wisdom for the entire curriculum. Now, the fourth topic that I want to talk about here in this chapter is creating tax-free income for the future. If you are a U.S. resident, you can trade in a regular account where you take the profits out right away, and in this account, you'll pay income tax. However, you can also trade in an individual retirement account. It's called an IRA. And in these accounts, there is no income tax on the profits that you make. The government is encouraging you to save for retirement. The more you save for retirement, the less you're dependent on the government in old age. So for this reason, every trader should have both a regular account for income to cover your cost of living expenses and an IRA for growing tax-free profits. Now, I'm not obviously a CPA. You should always consult a CPA when it comes to tax matters. But certainly in other countries, there are different tax-deferred accounts that I know exist and I've heard of people using. So whether you're in Japan or you're in Canada or you're in Europe, different European countries, there are opportunities to trade in tax-deferred or potentially entirely tax-free accounts. And it's absolutely something that you should be considering. In the simulator, it doesn't matter, but when you get to the point of trading with real money. So one of the things that's really cool is that you can actually trade in multiple accounts at the same time with a number of brokers. Many brokers, like Charles Schwab, offer third-party software that allows you to trade in 2 or more accounts that all have your name on it. at the same time. So you can't trade for other people, but you could trade for yourself, maybe for your spouse, something like that. So you could set up your regular account, which is your taxable account, and then you set up your Roth IRA, for instance. You make your contribution. You're limited to how much you can contribute each year to that account. And then whenever you take a trade, you set up your hotkeys, essentially your scripts. So you're executing the same trade in both accounts at the exact same time. So now you have the ability, yes, to double your risk because you're taking twice the position, but also to double your profitability. So during Chapter 6 of Strategies and Scaling for Warrior Pro members, I'll walk you through how to install the software and how to get it set up and working. I've got some demos where I show you exactly how it works. And it's a great opportunity to begin saving for retirement without sacrificing, also focusing on trading for income. In the older days, if you wanted to trade in two accounts at the same time, you kind of had to have both of them up and click the buy button once and then click it a second time, or just trade in the morning in that account, in the afternoon in that account. And anyways, it's a lot easier today. And so I will tell you that being able to trade in a retirement account is one of the fastest ways that I could imagine being able to grow these accounts. If you fund an account with $6,000 or even $7,000, and you just invested that money, $7,000 into the S&P 500, realistically, $7,000 into the S&P 500 over the course of 10 years, 7 to 10 years, it'll double. So at the rate of 8-10%, it will double. So you get up to $14,000, then it doubles again to $28,000, then it gets up towards, $60,000. But this is over the course of, 7 years, 14 years, 21 years. On the other hand, I'm going to tell you that I was personally able to grow my Roth IRA, which I initially set up a number of years ago with the minimum contributions, or the maximum contributions at the time, which was around $6,000. You put in $6,000, year 1, year 2, year 3. That account, I've grown it to millions of dollars. And there's no way I could have done that if it weren't for actively trading in it every single day. So back here, on the screen. So compound interest. For those of you guys that aren't familiar, compound interest is the most it's the most incredible concept and reality of the financial markets. And it's that as you save money and reinvest that money grows. And so if I can earn $200 a day in my retirement account, so my daily goal is $200 a day. That was as a beginner, and I'm trying to save $200 a day in my retirement and also make $200 a day in my taxable account, so $400 a day total. But just the $200 a day that's in my retirement account, I would be saving $50,000 a year. Now, that doesn't violate your contributions because you make the contribution, which is $6,000, whatever it is, and then you're just trading in the account. So you could trade in it as much as you want. So now, if I'm making $200 a day, I'm saving $50,000 a year tax-free. If I do that for 10 years, and I've invested those funds into the S&P 500, yes, I would have saved $500,000, $50,000 a year times 10 years. But thanks to compound interest, the account would have grown to nearly $900,000, thanks to the dividends, the interest, and the compound growth. Now, if I'm able to do that for 20 years, I'll have saved $1 million, but I'll have actually grown the account to $2.7 million. Even if I was just averaging $200 a day, $50,000 a year. But of course, if over the course of 20 years I was trading, I'd probably be increasing my profitability. So the growth curve increases exponentially as you begin to earn interest on the money that you earned interest on during those first few years. It's incredible. It's how you turbocharge your equity curve. Now, if you can earn more than $200 a day, you're going to increase the equity curve even faster. So my personal Roth IRA grew to over $10 million in less than 5 years, and it's still growing today. I still trade in it. I trade in it almost exclusively. So I really only use a relatively small amount of money for day trading, which means the rest of that money has been invested in the market long term. So even though it hasn't been in there for a really long time, it still has 20 plus years to keep growing. That's the incredible thing. Now, with a Roth IRA, you can't take the money out till you're 59 and a half years old. However, for those of you guys tuning in who are already 59 and a half or in your 50s, if you have had the account set up for at least 5 years, then you can start taking the profit out of that account on the same day that you make it, which is pretty incredible. So again, the government wants you to be self-sufficient in this regard. They don't want you to be depending on the government for retirement. So, everything that you would depend on the government for. So you have this this feature of the Roth IRA where the profits are tax-free. And after 59 and a half years old, you could be taking it out immediately. Now, for me, because I'm younger, the account is going to have a lot of time to grow. But that's great. So the more money you can save early on, you are doing yourself a huge favor in the future. Now, I know some of you guys tuning in, you're older, you're not worried about this. Some of you guys are younger, and this is going to make a huge difference in your life. So pay it forward. You will thank yourself in the future. So since I only use a small amount of money for actively trading, the rest of it gets to be reinvested. I don't keep $10 million in my day trading account. That would be insane. I don't need that much money in my day trading account. So I keep a little bit of money in the day trading account, and then the rest of it just gets invested long term. And I keep trading every day, and I keep growing that retirement savings. So when I reinvest my day trading profits, I move them to lower risk long-term investments. So when you reduce your risk, you also reduce your return, right? So $10 million is returning 5%, 7% a year. I don't think I'm even getting 10% because I've chose to reinvest it a bit more conservatively. But obviously with day trading, you can produce, I have proven that I can at least produce some pretty huge percentage returns, certainly 100% per year. I mean, you've seen me do these small account challenges. Turning $583 to $100,000 in 45 days was a 17,000% return in 45 days. When I turned it up finally to $1 million, it was a 170,000% return. When I turned it to 10 million, it was a 1.7 million percent return. And all of those returns have been independently audited, by the way. But could I have turned $58,000, just for instance, into $1 billion? And the answer is no. These returns would not be scalable to starting with that kind of money. And it's just because there is a limit in the market to how many shares you can easily buy. The good news, I suppose, is that the market has more liquidity today than it probably ever has from the combination of commission-free trading and changes in regulation around settlement time and sort of all of these nuances that have occurred behind the scenes. And it's been great for brokers. They love it. There's more trading. There's more profitability for them. And it's been great for the markets in general because there's more liquidity. And it's great for traders because more liquidity does mean you could scale your trading up to bigger and bigger position sizes, ultimately, if you had the risk tolerance to do it. So now let me share a story with you. This is about a neighbor. And I've heard a lot of people share this story over the years. The news first came out in 2015. Ronald Reed spent years pumping gas, but he was even more adept at pumping up his portfolio, according to Anna Pryor at the Wall Street Journal. So Ronald Reed, Mr. Reed, lived in Brattleboro, Vermont, where I grew up. He lived on the same street. At the end of the street, he had his house. And whenever I would see Mr. Reed, around the neighborhood or driving around, he had a small little car. It was like a compact car. It probably didn't even have a radio. It was kind of beaten up. And he had old jackets with tape kind of holding them together a little bit. And he would drive around town, and when trees would fall down, he would pick up the branches and bring them back to his house and then use that for firewood for his house. So he was very frugal. And nobody thought that he had any money whatsoever. But when he died in 2015, he had an $8 million portfolio, and he left it to the Brattleboro Hospital and to the Brattleboro Library, giving them, I think at the time, the biggest single donations they had ever received. He died at the age of 92. And nobody knew about this wealth. Nobody knew. But what he had been doing is, since he was a young man early in life, and he was a mechanic, he didn't earn a lot of money, but what he was doing was he was buying shares of dividend-paying stocks. And he was having the dividends automatically get reinvested. And he did that over the span of his 70-year, he had probably a 60-year working life. and up until the age of 92. And so there's no doubt that in the last few years, from 2001 through 2015, that his account probably at least doubled, if not more. It might have tripled. So, and certainly during the dot-com bubble. I mean, there's just no question that his account, had this sort of rapid meteoric kind of rise between the dot-com bubble and eventually when he passed away in 2015. And so I share that with you, not to inspire you to live frugally like Mr. Reed did, because I don't know that is the way to live, but as a lesson on the power of compound interest. And so for me, the way I've always thought about trading, once I started to produce some serious profit, was that I wanted to move the profits from the high risk area of actively day trading to lower risk investments. Most traders keep anywhere from 5,000 to 100 grand in their active trading accounts. Certainly some traders, will keep more who are doing well. But what do I do with the profit that I make? I reinvest it into the market and into real estate. I consistently reinvest the profits. I don't just spend them. So after 5-10 years of profitable trading and active reinvesting, you can be in a position where you're actually earning more money on dividends and rental income than from active trading. And that's pretty incredible. That is the ultimate in financial freedom and independence. And then at that point, you continue trading and you're just adding icing onto the cake. And that's really the place where I'm at today. Now, I've had years where, because of the way my long-term investments are positioned, I'm not producing like fixed income from them. So I've had years where the market's been down and where those accounts underperform. And I still am green day trading because I'm cash at night. And so I'm just getting in, getting out. And on those years, I feel great that I still have this consistency of trading every day. But then there's other years where the overall market's been extremely strong and my long-term accounts do really well. And I'm like, I'm showing up here every single day, but at the same time, I enjoy it. And trading for me is very satisfying. It feels like a puzzle, like a Sudoku puzzle, or maybe a word cross puzzle. And every day I get the chance to solve it, and I can see how quickly I can solve it, how well I can do. And there's no such thing as perfection. I can always do a little bit better. And I think you'll feel the same way. And many of you guys may already be hooked. You're into trading, you love it, and you're just trying to get it dialed in and learn as much as you can about it. And so I completely speak this language. And then just as a side note, to do alternative investments in a self-directed Roth IRA, you can use specialized custodians. And then you can invest in real estate and other asset classes with your IRA account that you wouldn't be able to necessarily invest in if you were using a broker like, Charles Schwab. A lot of brokers like that just allow you to invest in equities and maybe bonds and some crypto a little bit, but you can't buy a rental property. You can't buy, 5 neighboring houses in your neighborhood and rent them out. You wouldn't be allowed to do that, but you can do that in a Roth IRA as long as you have specialized custodians. So just a side note on that. Again, that's looking a little bit ahead, but one of the goals of this curriculum is that I give you holistic, well-rounded financial education, financial literacy. It's not financial advice. I'm not a financial advisor, and I can't give you personalized financial direction, but I can share with you the lessons that I've learned over my years in the market and the years growing wealth, and then learning some of the challenges with what to do with it and how to reinvest it and how to continue to grow it in a safe and responsible way. So this is a question that I began asking myself, early on. How much money do I really need to live comfortably? And this kind of is how I backed into my daily goal, which initially was $200 a day. So here's a question. How much money would you need to have saved in the bank to retire comfortably today? Everyone's answer is unique to their personal circumstances, but there are some popular formulas to find this magic number. And I want to share a couple of those with you today. The rule of 4%. It's been well established and popular for generations. And the rule states that you can safely withdraw about 4% from an investment account each year, pretty much indefinitely, without depleting the equity. How is this possible? Well, the average account growth is 7 to 10% a year. And again, depending on the investment allocation between stocks and bonds. But in any case, 7 to 10% per year historically. So when you draw out 4%, the account is still growing and even keeping up with inflation. Now, you'll have some years where the market's down, you're still taking your 4%. And then you'll have some years where the market's up quite a bit and you're taking only 4%. So it averages out over longer periods of time. Now, some argue that you actually could probably draw out a little bit more each year than 4%. And others say, oh, maybe you should do more like 3%. So at the end of the day, it's different, some different schools of thought, but roughly they come out to about the same. And so to figure out your magic number for the rule of 4%, we use the rule of 300. And the rule of 300 states that you multiply your monthly expenses by 300 to figure out the amount of money you need to retire. So just as a scenario here, if you spend $5,000 a month, or that's what you want in retirement, about $1,000 a week roughly, then 5,000 times 300 is $1.5 million. $1.5 million times 4% is $60,000. Divided by 12 is $5,000 a month. So this is just a roundabout way to get that same number. So my idea here is that it helps to have a little bit of a goalpost where I know I want to work towards this number. Now, if you're young, you've got a lot of time. If you're older, you've got, less time. Hopefully you've already saved some money, but if not, it is what it is. This is where you're at and this is your number. And the question is, how quickly can I get to this number? So if the number was $1.5 million, then as soon as you have $1.5 million, you don't need to learn how to day trade, right? You've got the money in the bank, so now you just live off that savings. But I can't help but come back to this stuff here, which is I love feeling that I've got the 1.5 million in the bank and I can draw 60,000 a year, but I feel better knowing I can make 5,000 a month. That feels more like self-sufficiency. Now, I suppose when the money, thinking about an acorn and a chipmunk saving their acorns, when you've got that money in the bank, I mean, those acorns are there, but it feels good knowing you've got an endless supply of more acorns, that you've got oak trees all around you that you can survive on for years to come. Even if, God forbid, something happens to the bank or something happens to the market, all these worst case scenarios. And so I like to think about combining savings and trading. So when I think about earning $200 a day, that actually produces the same monthly pre-tax income, which is $5,000 a month, as drawing 4% a year off a $1.5 million retirement account. And that to me is an incredible feeling. That feels like when I'm making $200 a day, it's as if I have a $1.5 million account. Now, that's just a way of thinking about it, making the glass half full. It's kind of a mental trick you're playing, because trading is not passive. It's certainly a trade-off for your time. It requires a lot of effort to learn, requires showing up as often as you can to participate in the market. But then the reward is having this skill that can produce profit, where I am my own boss. And that is financial independence. Because showing up and trading for a few hours a day, this feels to me like retirement. This feels as good as retirement could be, because I enjoy doing it. I'm happy. And that's kind of that old saying, when you love what you do, you don't work a day in your life. And coming in and solving the puzzle of trading and looking through the scanners and the charts, it's enjoyable. And of course, in part, it's enjoyable because I've gotten good at it. But for all the people out there that show up and trade every day, I think their experience is very much the same. Of course, you have people in different spectrums of the learning curve and success rate and everything else. Now, there's a Bloomberg article that asked what wealth looks like to you. And about 60% of those surveyed said they live paycheck to paycheck. And so wealth to them is being stress-free and having peace of mind. And then being able to afford whatever I want to a lesser extent, loving relationships with friends and family, enjoying life's experiences, having lots of money, lower on the list, being in good health, also a little lower on the list, being charitable, even lower, and then other, a little bit lower than that. And so then they said, well, how much money do you think you need to have in order to be financially comfortable? Millennials said 1.3 million. Gen X said 1.4. Boomers said 1.6. All averaged 1.4. And how much to be wealthy? $2.4 million. That's what everyone said, on average. And so when I think about that, I think, well, gosh, $200 a day, That's $1.5 million in a retirement account. It's like having that. And so that $200 a day, that $60,000 a year, suddenly that's financial freedom. That's independence. And so now, how do we work backwards yet again? So we work backwards to figure out what that magic number is. Now, it might not be 200 for you. Maybe it's higher. Hopefully it's not too much higher though. Because one thing I'll say is that one of the great gifts that I had with coming to the market as early as I did, I funded my first account in 2001. And I was a teenager when I was first trading. Then I had a period of time where I didn't trade and I kind of gave up on it. And then I got back into it. And when I was in my 20s and I was getting back into it, I didn't have kids. My cost of living was very low. And $200 a day, $50,000, $60,000 a year was enough for me to be successful. However, I was young, so I didn't have a lot of resources. I didn't have the resources that you might have when you're in your 30s or 40s or 50s or 60s when you're getting into the market. So when you're young, you don't have as many resources, but typically your cost of living is lower. And because you have so much time, you can afford to take a little bit more risk. When you're older, you have more resources, but you want to be more thoughtful about the risk that you're taking. So there's kind of pros and cons on either side. But if you're older and you say, well, for me to make trading work, I need to be making at least, $2,000 a day, $500,000 a year, right? All of a sudden it's like, yikes, you're setting the bar really high. So that means if you're making $60,000 a year, you're going to feel like a loser. You're going to feel like you're not doing well enough. Because one of the things that made it easier for me to be successful was that even when I was making only $30,000 a year, I still felt like I was making progress and it was worth it to keep studying. When I was making $40,000, it was like, keep pushing. $60,000, it was like, here we go. And then, up to 100. So if you come in and you set the bar too high, then I'm concerned immediately going to be like dissatisfied and you're going to say, this isn't good enough. And if you're saying, oh, $50,000 a year is not good enough, then I feel like the technique and skill that you had to produce $50,000 a year, all it needed was a little more polishing and it was going to get better, but you gave up on it. You said it's not enough. So setting the bar low, I think, can allow you to be pleasantly surprised. It worked for my wife. She set the bar low with me. and then look, when we met, I wasn't even, hadn't made, my first $1 million yet. I was still chipping away. So she set the bar low. She said, this guy, I'll give him a chance. And I think that's true with trading as well. So set the bar low. All right. So, oops, sorry. I keep jumping out of this. Let's see. So I started again with that simple goal of $200 a day. And over the years, the goal increased. So $500 a day, then $1,000, then $5,000. Today, my hot market daily goal is $20,000 a day, $5 million a year. And yes, it's a trade-off for my time. I have to show up every day. And I don't always have $5 million years. Those are hot years. I also have colder years. And, but the fact is $20,000 a day, $5 million a year, that would be like having $125 million in a retirement account to pull $5 million a year off of it. So that $20,000 a day is incredible. And I have to show up for a few hours a day to trade, and I've got to go to bed a little earlier, and I've got to, it's a juggling act. It's a job, but I enjoy it. I really enjoy it. And I love the extra time that I spend teaching you guys. Cause, again, growing up in the situation that I grew up in, with a lot of anxiety and kind of lower self-esteem, and with everything that happened with my father, I had very low confidence, and my 20s were really, really hard. And so now to have learned something and who've gotten good at it, and to have so many people that want to hear me teach and share that with you, it makes it, selfishly, it makes me feel really good about myself that I have something that you guys actually want to learn. And so I'm thrilled to have people that come up to me and want me to share this. And whenever someone comes up to me in the city, or when I'm down in New York, or when I'm traveling or I'm at the airport, I'm always thrilled to say hi. And sometimes I carry a copy of my books because I run into people often enough that I'll give you a copy of my book if I have it with me. And so it really it's something I really enjoy. Some people say, Ross, if you're so successful, why do you bother teaching? And my success and my teaching kind of happened in a similar cadence, where I created my YouTube channel in 2013, and I was sharing my own experiences of learning to trade. And I was having ups and I was having downs. I was having red months, I was having green months, and I was just sharing in a blog post and in YouTube videos what I was kind of going through at that time. And I realized that there was a lot of people that were trying to trade also in those years. And so I created a community just to surround myself with other people that were in the same mindset, like a club, essentially, just a nice group of traders. And some of those members are still here today, and they've earned $1 million badges. And some of them now, have begun teaching and sharing, with the community as well. So, anyways, it now it feels like to do one without the other would be sort of silly. They're so intertwined. Anyways, so, I encourage you to create your 5-year and 10-year financial goals. Set goals for yourself, make plans. And this is like being a little type A personality to kind of, I know not everyone thinks about this stuff, but I think you should put it out there. And at the end of the day, what we're really doing in this curriculum is I'm walking you through, this journey, and it's stepping stones, getting you from where you are today, A, to where you want to go, B. Now, we may find somewhere along the way that, maybe you don't have the aptitude to trade the same way that I do. Maybe it's, for whatever reason, it doesn't work for you. And so it's at a certain point here, there's a fork in the road, and you make a pivot and you go this way. And that's fine. There's nothing wrong with that. We all do that. I've certainly done that on a number of different, ventures and things that I've tried to do. But during this period of time when we're together, what I'm trying to do is empower you and give you the knowledge to help you make steps on this journey. And what you're ultimately going to be working on is converting knowledge into skill. And the way you convert knowledge, which is everything I'm sharing with you here, into an actual skill that you own, is by practicing. And that's what you're going to be doing, of course, in the simulator. Now, I know some of you guys are young. Some of you guys, you're going to be thinking, geez, Ross, I just can't wait to buy that Ferrari, $4,000 a month lease. I can only put $5,000 miles on it per year, but I'm going to go ahead and spend that $144,000 on a 3-year lease on a Ferrari, and I'm going to be driving in South Beach, Miami, and everyone's going to be looking at me, and I'm going to be the voice of reason saying, don't do it. Put that money away, save it. You put that money away, you save it. You just put it away, you forget about it. You don't touch it. By the time you're 65 years old, that's $1 million, that Ferrari, because you put it away and you save it. You just put it away, you set it, you forget it, you do what Mr. Reed did. Now look, you want to spend a little, you want to enjoy life, I get it. Go rent a Ferrari. Go to Las Vegas, rent a Ferrari for a day, whatever. But try to, see, this is the thing that I feel like it can be very hard to have the resolve to stick with your plans, but many of us make short-term financial decisions that are inconsistent with long-term goals. And so before making big financial decisions, am I going to buy a new house? I've certainly had, students here at Warrior Trading who they've had a great month and they say, all right, I'm going to buy a new car. And they send me a picture of, a McLaren they bought. Or they say, I'm going to get a new house, or I'm going to get a new apartment. And, on the one hand, I'm like, you should reward yourself for, the hard work you've put in. But I also am always conservative and cautious in saying, just make sure you don't get in over your head, because we know that the market has ups and downs, and you'll have good years and you'll have bad years. Now, a bad year for me is when I make, at this point, only $300,000. And a good year is when I'm up more than 5 million. And I've had years like that are back to back. And it's kind of crazy, because I'm like, how did I make 5 million last year? And this year I can't even make 300,000 in the whole year. I made more than this in one good day last year. But the market is cyclical. And the good news is I've been able to be consistently green, even through the coldest markets and the biggest drawdowns. But, there's going to be ups and downs. So make sure you size according to basically the slowest year. That way, on the years when it's good, it's icing on the cake. And on the years when it's slow, you're not having to go trade in that car. You're not having the repo guy come and tow it. You don't want to back yourself in that situation. So you want to make sure you have something to tangibly show for the time you've put in the market and the success you've generated, certainly when the market is hot. So now let's talk about the reality of why traders fail. The leading number one cause of failure is lack of strategy. Traders come into the market, they're excited, they're euphoric, they hear about all these people making money, and they're like, all right, I'm going to just jump in, and they just start buying stocks. They buy, or even cryptocurrency, they just buy what people are talking about, whether it's on social media or whatever. They just basically are throwing darts at the wall. They're just jumping into whatever with no plan. It either goes up like GameStop did, or they don't know what they're going to do. They're going to hold it forever. And that's not going to be any of you. It's not going to be you, because you're already showing by being in this class that you want to think of this systematically. You want a strategy. You're already thinking about this in a more business-minded sense. So that's not going to be you. There will be a strategy at the end of Day Trading the Basics. It's my one setup, and it's my favorite setup. And then there's even more at the end of Strategies and Scaling. But the second leading cause of failure, and this one's still on the table, and we've got to look out for it, is an inability to maintain the discipline required to follow the rules of the strategy. And this one is a really frustrating one for me, because I'm going to give you the rules. I'm going to give you the roadmap. It's all on the table. And all I ask you to do is to follow the rules. Doesn't seem like it should be so hard, but it is. And it's hard even at times for me. I have days, and you'll see me on some of my worst days, because I stream every day, whether it's a green day or a red day, you see it all. And you'll see me on some of my worst days, and you're probably thinking, Ross, you probably should have stopped trading like an hour ago. It's not the right day. You're being too aggressive. And in that day, for whatever reason, I'm having a hard time following my own rules. So nobody is perfect, but it's something you've got to really work towards, having the discipline to follow your rules. So I'm going to give you the rules, but you got to work on bringing the discipline to the table. It's so important. Now, I will equip you and share with you some of the techniques that have helped me be more disciplined in my trading. We do have 2 professionals that help with our trading psychology course, and they're really good at what they do. And I've brought them in to help talk with you and walk you through trading psychology, because following your rules is a mental game. You can have all the skills to be a trader, but then it's the mental game, following your rules, that you struggle with. So we're going to get to that, but I just want to put it on your radar that it's important, and it's something to be aware of. And it's one of the reasons that it's so important to practice in a simulator and to build your track record in the simulator before putting real money on the line. Because we want to make sure that we make the transition from learning, education, and simulator to real money as smooth and seamless as possible, so you don't have the experience of taking huge losses and then becoming emotionally compromised. Because what ends up happening is you come into the market. What happens to a lot of beginner traders who fail is they come into the market and they're immediately focusing on making money. They're like, I want to make as much money as I can. So what do they start doing? They start trading. They just start taking trades. But they don't know what they're doing, so they lose money. And now they're feeling the emotion of anger, sadness, disappointment. They don't want to feel sad anymore. What's the best way not to feel sad about being down $1,000? It's to make $1,000. So you take more trades, but you don't have a strategy. So then you lose more. Now you're down 2,000. What's the best way to make back 2,000? And they spiral. And the trader can come in and just immediately their account goes like this until they're at max loss. And so what would be the inverse of this death spiral? The inverse of that would be, instead, if you came into the market and you focused not on money, but you focused on the process. You focused on something like accuracy. And in order to have really high accuracy, you need to focus on quality. So A+ quality stocks, which means you need to have a system. So you only trade A quality stocks, which means the total number of trades will only be probably 1 or 2 trades a day. So you're taking less trades, but they're higher quality. So then you start to produce some profit. Now this produces confidence. You feel good, which means you're going to start taking bigger share size, which then, well, the circle's not big enough. So then you start increasing your, your share size, your quantity. We'll just go like this. And then with that same accuracy, profitability is going even higher. And this is a positive feedback loop. It begins with accuracy, and you're not going to have high accuracy until you've first gone through the process of understanding how to identify strong stocks, where to get in, where to get out. And so we're going to get there, but that's the way we're going to do it. Now, secondary contributors that can lead to failure can be that your disposition is not aligned with the risk-taking nature of trading. This is a reality. You have to take risk, and you've got to be able to make decisions quickly. Having the aptitude to make these decisions quickly and use computer software isn't for everyone. And that's something you're going to learn about yourself. Number 3, using incorrect equipment. For instance, you trying to trade on your phone instead of using a computer, trying to trade on an iPad instead of using a computer. Potentially an inability to concentrate, a difficulty absorbing and retaining new information, and a lack of emotional intelligence, an inability to recognize your own emotions of fear, greed, anger, frustration in yourself and in others, and how they contribute to the way you trade and to the market. These are contributing factors that can lead to success or failure if you have them or don't have them. And so strategy, number 1, and an ability to follow the rules, number 2. Those are your most important. And then the secondary contributors, those are a little bit more tied into, who you are as a person, and then even, what you've been doing in your life leading up to this. Some people have already been doing things that position you really well to transition into trading. And for others, getting into trading is just such a career change that there's a lot of kind of like ancillary things you need to learn, like how to use the computer and how to install the software and typing. And so that all factors into whether or not you're in a position to, it factors into the learning curve and how quick it'll be or how long it might be, essentially. So the right way to learn, and there's a right way and there's a wrong way, in my opinion, is to find a successful trader that you want to be like. And I think of this kind of like the right way to start a coffee shop is to look at a coffee shop that you like that's really successful and learn everything you can about them. And to learn their strategy, to mentor there, to work there, and to practice the strategy. And then to try putting some real money behind it, and then to scale up. So learning to trade, to me, isn't that much different from learning to create or build any other type of business. You want to find someone who's already succeeding in that business. Figure out everything they're doing that's working for them, if they'll share it with you. Learn the ins and outs, and then see if it can work for you. And then if it can, then it's time to scale up. So, you're fortunate in the sense that I put everything on the table and share with you in full transparency, my ups and my downs and the ins and outs of the strategy. And so it's an opportunity to learn from me. And now, are there other traders out there that you could learn from? I'm sure there are. Are there others that are as transparent as me with audited statements and sharing their P&L? I don't know. I don't think so. Not that I'm really aware of, but there may be. And, at the end of the day, you can learn from whoever you want, but it makes a lot of sense, in my opinion, to learn from someone who's already really good at this. That's kind of the moral of the story. Learn from someone who already knows what they're doing, and surround yourself with the type of people who are also trying to do this, because then you're immersing yourself in a community of people that are speaking the same language, learning the language of the financial markets, not unlike learning a spoken language. And it's easier when you're surrounding yourself with other people speaking the language at the same time. And that's what you're doing right here. So number 7 is setting your definition of success. What does success in trading mean for you? What does success in this course mean for you? Is it about a certain amount of money? Is it about what you learn? Is it about what you learn about yourself? Now, I want you to be prepared for the reality that the first 3-6 months, even the first year of following the trading plan that I've prepared for you, is not about earning any significant profit. It's about proof of concept. That's what's important. One of our members, he's got a $750,000 badge right now. He started trading with a daily goal of about $10 a day. He was only trading with, I can't remember, it was like 50 shares or something like that, 100 shares. And he just said, if I can just get 10 cents a day per share, $10 a day, that's good. And he did that for nearly a year. But he was scaling up slowly from $6 days, $8 days, eventually to 12, 15 to 20, 25, 30. He ended up having, I think his best year was last year, over $300,000, and has now gotten his $750,000 badge. It's not about overnight success. That just doesn't work that way. It's about having the discipline to follow the path laid out. And he was so good about going really slow and really steady. So your first year, it's not about making a lot of money. Your first year is about survival. Just like the first year of any new business, it's about keeping your head above water. As a beginner trader, most people set a goal of 100 to 200 a day. They try to keep it realistic. And they don't even start with that on day one of trading with real money, because on day one of trading with real money, as you'll learn when you get into the trading plan, you start with only 100 shares. So you start with a $20 daily goal, and then you move up to 1,000 shares, which is $200 a day over the course of several weeks. It's not about making money. It's about being consistent. It's about survive till you thrive. The longer you can keep your head above water, avoiding blowups, not taking unnecessary risks, preventing the big losses, the more time you'll be able to spend in the markets gaining experience. At a certain point, learning to survive teaches you to thrive. Learning what not to do is what keeps you alive in the market. So it's kind of incredible, because there's a part of me that believes just the longer you can survive, you'll pick things up just through being in the environment. Now, that, I suppose, can't overcome certain aptitudes that you may lack and things like that, but there really is a lot to be said for survive till you thrive. And as I've done interviews, and you'll be able to watch them, I've done interviews with a number of profitable traders who have earned their badges here at Warrior. As you watch those interviews, you'll learn that not everyone has like an aha moment where they just have a turning point where they immediately go from losing to making money. For many traders, the turning point from losing to breaking even can be very subtle. The transition from breaking even to making small progress might feel unnoticeable, but don't discount the effort it takes just to keep your head above water. So I count consecutive days of having discipline as being far more important than consecutive days in the green. Stay disciplined to the trading plan and follow the rules. Your profits are a byproduct of the process. Okay, so that now sets the stage really nicely for going in to the next chapter. So we're going to jump in to chapter 2. Chapter 2 is picking stocks for day trading. I'm going to walk you through how I came to trade the type of stocks I trade today. I'm going to talk about a couple different areas of the market, and then we're going to get kind of dialed in on the type of stocks that I trade. And then we'll just continue making our way through day trading the basics. So with that, I'll let you guys continue on to the next chapter.